Greetings, everybody. This is Jeff Scott. It is about 9:30 on what is today's date? September 25th. Now, of course, this is take two. As like my seminar this weekend, for whatever reason, the audio was messed up. So, those of you that attended my seminar, I will be doing take two of the seminar videos. The video came out fine. It's just the audio is problematic, and I'll be uploading the new versions by the end of the week. Let's get started with today. Just to do a quick futures check, I'll look on my phone since I already opened up this view. They're up a little bit today. Not really. The Dow's up, post fair market value 13.5. S&Ps are flat. Nasdaq's up 1.5. Russells are flat. So I guess I can talk about a market without any influences by the futures. So I entitled today Awaiting the Debate. And no, I'm not even thinking of the debate between the Donald and Hillary, although that debate's likely to rock the markets on Monday and Tuesday if there's any surprises. But the debate and the war between the Bulls and the Bears. I had the luxury opportunity this weekend to do a program on Friday. Thanks for those that attended. Again, I'll have the updated videos by the end of the week. And then I'm sitting through on Saturday, Sunday, and Monday, a 3-day meeting by my friend John Person. Always learn something new. Disclaimer, this is for education purposes only. Any recommendation in the spirit of education, not investment advice. I am a doctor, not a broker. Most physicians lose money with their investments. I'm not affiliated with any software vendor or trading company. The tools demonstrate those that I use in my daily trading, and I have paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I've developed my own investment techniques and strategies, and as I learned from Ian Woodward in the upper left-hand corner, I subscribe to the Be Your Own Guru philosophy, which is read, study, learn, develop your own skill set, read, study, and learn, improve your own skill set, read, study, and learn, and continue to get better as you go. I've had 25 years to go through that cycle a few times. Started with CanSlim, which was improved by Morales and Catcher, and then taken electronic with HGSI under the direction of Ian Woodward and Ron Brown. This is George Lee. He's my trading buddy. He lives up in Vancouver. Great guy, smart guy. Van Tharp sort of wrote the book, literally the book. These are giant books on money management and stop loss. And I do subscribe to his theory that we spend all the time worrying about timing of the market and what trade to take. What we should matter is what position size and money management. And then really the one that's changed my trading the most, John Person. I was one of the early adopters of his technology, his indicator sets for Genesis and TradeStation. I've read his books, I've done his training, and now I've even got a desk in his trading office where when I get time off from work, I actually sit there for a few hours a day and learn from the master and trade alongside. Great guy, been trading since the 80s, highly recommend his stuff. From mentoring to seminars to his indicators, and you'll see how I use them as we go through today. I need a lot of I don't need a lot of my desert isle. In fact, I forgot to start some software, so I'm going to pause this for a second and start up my TradeStation. Actually, I may. Oh, there's the pause. All right, just got my TradeStation up and running, and we will let that roll. All right, we got my TradeStation up and running. We'll let it roll. I'm just getting to learn this new version of Snagit, so sorry for the few jumping back and forth. I decided that was probably a good idea considering I'm having issues with audio with the old version. So back to the story. I have a lot of different programs, which you may have noticed. I need TradeStation and Thinkorswim for my real-time trading, HGSI and EdTrader for my aftermarket analysis. And for seasonality, I recommend you learn about it. I like Seasonality Trader. I own all three of these. And special thanks to Eric and David with Seasonality Trader for providing free trials to my attendees for my meeting this week. That was really nice of them. HGSI software, www.highgrowstock.com. This is the website for them. And key things here is a free 30-day trial. And the other thing that's key is if you go under investing strategies, you'll see hundreds of videos for trading, some about the software, some about the market. Key ones would be myself and Ron Brown. I like to think about how stock patterns are cyclical, and you need to know where you are in your stock and your market. Sometimes they're not overlap, but usually they're in the same cycle. I want to be buying when we're coming off of a base with momentum. When we're extended and rolling over, I want to be shorting. And during periods of uncertainty, I want to be sharpening my pencil, raising cash, and understanding what is the right thing to do. In fact, if I look at it, I can see that I have a different approach to the market based upon where I think I'm with the cycle. Where do I think we are now? My goodness, it's like we bounce back and forth in here. Part of me thinks we got another leg up, maybe set new highs, maybe a blow off top, and then a market major correction. That's what I've been banking on and playing for. But after last week, on Friday, in the 2 weeks before 2 weeks ago when we were pretty beat up, I'm not sure we're going to get the run up before the market falls. Hence, the bulls versus bears, the real debate. Do we take out new highs, or is it time for a correction? If you look at my sector review from TradeStation, put together by John, take the major industry groups. Red means down day, green is up day, Friday end of day, and you could see regional banks had some strength, some biotech did, and a smattering throughout, but clearly the overall feeling was negative. If I look at my Thinkorswim slides, now these are daily charts. Upper left is the E-minis, then the NQs, the YMs and the TFs, then the VIX and the dollar. And one can see that we gave back some on each of these indexes on Friday, but the only one that looks to have any damage is the YMs, and I think the YMs, the Dow has a lot of exposure to energy, which clearly was the weakest part of the market. Now, if you look at it, though, most of them pull back into their 17-day moving average. Not a whole lot of damage, and they're all still on John's PPS buy signals. If I look at the VIX, VIX, every time it runs up, it gets a quick peak and pulls back. Well, it's pulled back, and the dollar has failed at the 200. So looking at this, I don't feel doom and gloom. I feel like we still have a shot at going up and taking out new highs. When I look at the weekly, I don't see anything that tells me this is done. There are some sell signals. We still have a sell signal on the YM, which is the weakest, and I believe one on the S&P. But we have a new buy came in this week on the NQs and the TFs. Now, one could be imaginative and say shoulder, head, shoulder, neckline breakout of a head and an inverse head and shoulder. Shoulder, head, shoulder, neckline breakout. Shoulder, head, shoulder, neckline breakout. Shoulder, or in here, shoulder, head, shoulder, neckline breakout. It looks to me like these could all be inverse head and shoulder breakouts. I think beauty's in the eye of the beholder, and maybe I want to see them, but again, suggesting that we might go higher. And on my Genesis charts, of which we have columns that are E-minis, TFs, NQs, NYSE, and YMs, again, just want to emphasize that everything's on a daily buy. We're on weekly sells on the S&P and the NYSE, but we're on daily buys, weekly buys rather, on the YM, the NQs, and the TF. So it's weekly sells on the S&P and the NYSE. Now I like to look at AD lines, looking for divergences. I want to understand breadth and I can see on my AD lines that in white, which would be the AD line, yellow is a comparator of the S&P 500, and we can see that leading price are the AD lines, both the small and large stocks out to new highs. If I look at breadth by number of stocks above the 200-day moving average, number of stocks above the 40-day moving average, we're in the middle of the structure, a little bit more overbought on the longer term, but we're working our way from a market pullback. If I look at 3-month new high, new lows, 2 weeks ago we were down here where we usually reverse from, and lo and behold, we reversed. And now we have about 60% of the stocks making a new high or new low or making a new high. If I look at my daily McClellan, the bothersome thing here is clearly there's divergences with stock prices on whole moving higher and the oscillator moving lower. We're below negative on the daily summation index. Similar moving higher markets, not higher McClellan on the oscillator, below zero on the summation index. And I guess in some ways that might mean reduced participation, but all these things with the McClellans, the stocks above and below moving average, to me they're very important at times of extremes. And when we're in the middle like we are now, I don't get a whole much out of them. Buckets, 2 weeks ago we were at an extreme. You can see 9.9. I had almost 35% of the stocks in the S&P 1500 below the lower Bollinger Band. Just to review, what am I looking at here? I take the 1500 stocks in the S&P 1500. I put a Bollinger Band on each of them, and I find that 76 are below the midline of the Bollinger Band, 24% are above it. And that if you break deciles starting below the bands, 10 in the bands and 1 above the bands, I find that the largest number of stocks are below the Bollinger Band. Since 90+% of the time stocks live within their Bollinger Bands, when I see a number of stocks are below the Bollinger Bands, I think I know what that means. That means the stocks are going to rebound. And what I said last time, 2 weeks ago, I said I expect a recovery or a big move up within 2 days, and we saw it the next day. Whenever I see a big move off the bottom, I try and find these stocks that I call box stocks, which I learned from Ian Woodward. Now, there's a 10-box matrix, and it's 3, 3, 3, and then 1 off to the side for cash. And in the 10-box matrix, you look at earnings per share growth annually and then quarterly. And you start in the upper left with box 1, which is 100% annual and 100% quarterly earnings growth. These are stocks that you expect to double once a year. Box 7 is my favorite, which are turnaround stocks. In HGSI, I hit 2 keystrokes and I can get a list of buy stocks by box. So I looked at the data on the 12th, which is when I thought a recovery was imminent. And what I saw was since that time in the S&P 1500, the average gain is 1.15. But if you had found the stocks with the highest earnings growth, box 1, or turnarounds, box 7, you would have had a return of 3 to 4 times that. Imagine a 4% return, 4.37 in probably 6 trading days. The other thing that was important to point out was that ERG matters again. I throw out the tail and the head on this chart because the numbers are very small. But I look at the meat, and the meat shows me that it's going up. And that means the higher the EPS rank or the higher the relative strength rank, as we've broken out down here, this is leading stocks, and stocks under accumulation outperform. Now that probably seems like the obvious, but if you look at 2016 as a whole, the best performance would be the lowest decile by earnings per share and relative strength, and stocks that were distributing as we went into the year on 12/31/2015. As I look at the ERG chart, ERG has been bad. So this has been a year where the market has not performed normally, and my expectation and guess is that this is very much a market off the bottom, not a typical leadership. Here's our current buckets. Clearly, we're not at an extreme, so I would say that's neutral. The Hindi represents the Hindenburg omen. And I guess as you can tell from the word omen, this is something that might predict a bad outcome in the market. I look at it at a market top. The pros are selling to us, the amateurs, and during that period of time, you might have high volatility, you might have some new highs, some new lows, and there's basically a formula of 4 or 5 characteristics. There has not been a major market correction in 50 years without a Hindenburg signaling. So I look at it classically, it's on the NYSE, of which we've not had a signal all year. But on the Russell 3000, just for shits and grins, I did find some signals back in May, but right now no signals there. That might make me feel easier about an imminent major correction. The other thing I might feel easy about, this third group of things here, it's a number of indexes, is called the Woody indicator. When they're green, the market's on a roll, you want to be long, you want to be margined up, you want to make money. When it's in green, red, yellow, that's in chop, and that's a time where overtrading will kill you. And you go from periods of green to chop to green, to a period where the market was weak. Hold on a second. With mostly red, and then we had a bunch of kahunas come in last week, which turned the market to more of a buying mode. I look at leadership stocks to get a sense of what the market is doing, with the hypothesis that leaders will roll over first, and that I use these as an early warning symbol. And the canaries are a number of stocks that Ian made up maybe 5 years ago as far as a user group. We need to rotate LinkedIn out, I guess, and come up with what to replace it with. I'll have to think about that a bit. Maybe some high flyer, because these were all young high flyers when we put them in there. And one can see that the canary index is at resistance of prior closing highs, so it's clearly still performing well. As always, you need to know your news and earnings dates, and here's a list of some of the earnings on the right. Not a lot, but if you have a big position in, for example, Pier 1 or Nike, it probably matters to you. And then on the news side, a smattering of different reports, including home sales, confidence, durable orders, GDP, energy, claims, pending house sales. So there may not be a Fed meeting this week, but there sure as heck is a lot of underlying information that we'll need to follow and know about. Market thoughts, buckets held, and they predicted a reversal 2 weeks ago, as mentioned in the webinar, and we got it. Market characters has changed. It'll be interesting if there's a blip or return to normalcy instead of the junk off the bottom. If you look at the markets today versus prior to the Fed, we're at the same place. So all that concern about the Fed, and it's already gone. Speaking of gone, we did not get a rate raise in September. Most people don't think we'll get one before the election. So now it's time to think about the end of the year for a raise. Note to self, go look at what happened in the beginning of the year to the market after the December raise last year. So the debate Monday could be a newsmaker. If Trump does well, may affect the market, likely keep Monday on a short leash. Typical agenda, market review, top-down analysis, and bottoms-up review, and charts of the week. Since we haven't done one in 2 weeks, and last time I did not do a chart of the week, I've got nothing to review. So give me a couple seconds just to make my charts look pretty. And in fact, I wanted to load up one. Here it is. I'm going to start here with the Commitment of Traders report. This is using a setup that John Person puts together. And let's look back to the last market crash and see if we can get some clues. So there's three types of future buyers here. In red, you've got, I guess they're called commercials, they're hedgers. It could be, if I was looking at, let's say, gas futures. Let's say I was a refiner and I'm sitting on a bunch of gas. Fuel for the car is gas. And I'm concerned that the price of gas is dropping and I'm going to get a lot less money for what I prepared. So I might buy a put option so that if the market drops, I'm protected. So that's not really betting that the market's going down, because I was betting the market was going down, I'd sell my gas stores quickly. It's hedging my long position with a short to reduce my downside by paying premium. So I don't look at people like that because I don't know if they're long or short. And it might be taking a short position just to protect their long. In blue, we have the professional speculators, the hedge fund guys. You notice as the market came down in 07 and 08, the hedge fund guys were short. Guess who's yellow? The dumb money, us, me, you, the individual investors. And so clearly in the market fall of 07, 08, 09, it's pretty clear to see that we were in control, which was a bad thing, and we were buying when the professionals were selling, and the rest is history. We hit a big bottom. Now it's interesting, right before we bottomed, the pros started buying and we started getting out of the market. Where are we at today? The pros are buying. So if you want to find evidence that we're going to go to a new high, I put a button there, a vote there. What do I do here? Let's take a look at a couple of other things. I try to get an understanding of the market using what I call my 5-point matrix for the market. This is a mixture of stuff that I've learned over the years from various people. One would be John, 2 would be Alexander Elder, and 3 would be Ian Woodward. I look at 5 points on every one of these indexes, and I actually create a score that I track, and based upon that score, I'm bullish, neutral, or bearish. The 5 components that I look at for each of the time frames, I look at, is it a green arrow up or a red arrow down? That's a key. That's a person buy and sell signal. Number 2, what is the color of the paint bar? That's the Elder impulse indicator. If it's green, Elder would say it's okay to buy or hold. If it's red, it's okay to short or hold. You don't buy on red, sell on green. And if it's blue, you're free to do whatever you want. The third thing I'm looking at are these red dots here. Or green dots there. If they're green, they suggest MACD convergence and a sign that the selling pressure is abating. If they're red, they might suggest MACD divergence and a sign that the buying pressure is abating. The fourth thing I look at is how much extended above or below the envelope I am. And when I get far below, I know within a couple bars I'm going to shoot back in. And then the fifth is a measurement of how extended you are. Something we took from Ian and made better, looks at what percentage of today's bar are we extended versus over the last 200 days highest extended, and we're at 76. When I get above 90 or 95, I think a market's going to reverse. So if I was to give this points, I would see we've got, of the 5 points, this is good. Envelope is good as 2, the arrow is good as 3, the color is good as 4, but I've got the red dot, so I'd give 4 points to the daily E-minis. If I look at the weekly, it's down. It's got a sell signal and it's blue. It's within the envelope, so that's 1. And I don't have the other check, so it's only got 1 out of 3 points. So we now got 5 out of 8 possible points. And down here we got a green arrow, green bar, and I don't have an envelope, so I only got 2 points. So I got 7 out of 9 points, 5 out of 8, 7 out of 10 points. Not perfect, but not bad. So the hindrance here is the MACD divergence showing here, suggesting that this run may be getting long on the tooth. So that's the E-minis. The NQs and NASDAQ 100s, similar picture, green buy, but you have a blue buy here and a green buy, and you're at 91% unextended. Bullish in every way, needs some time to refresh. If I look at the TF, which is the Russell 2000, I see, again, green daily, green weekly, green monthly. Red dots are bothersome. Other than that, this one looks stronger than the big stocks. And if I look at the NASDAQ, so I looked at the NASDAQ, I think. Yep, NASDAQ looks good. I haven't looked at the Dow. Quick look at the Dow, and the Dow looks green on green arrow within the envelope. Dow looks pretty good as well. So the indices look good. It's hard to get upset at the indices. The dollar. The dollar's red. It's red in color, but on a weekly buy, and it's red with a monthly sell. So of the 6 possible signals thus far, 5 are bearish. It's within the envelope, and there's no dots there, and the high jump bar is not a problem. So the dollar looks weak, certainly looks weaker than the indices. If we then look at the VIX, let me see if I can figure out what the at VX. Let's see if that works. Invalid signal. So I want to look it up. VIX futures. TURES. And I'm looking in futures. VIX. Okay. At VM. Learned something new today. All right. So I'm not enabled for this one. All right, so let's just look at the VXX. Yeah, we'll look at the VXX. The VXX is one way to play the VIX, and it's red, red, red. The VIX looks low. So a low VIX, a weak dollar, strong markets, that's conducive to a rally. If I look at gold and silver, here's gold. Big move up, middle of the week, maintained it. And I don't think I have silver, but let's see. It looks a little bit better than gold, doesn't it? Mostly green. All right, so markets look okay. I guess oil's rebounding a little bit this morning. And I put this trend line in here because we're coming right up against our descending trend line. Oil prices matter. A lot of the oil stocks looked weak this weekend. And it'll be interesting to see where this oil price goes and whether the Saudis, Russians, and Iranians can come up with an agreement to limit supply. So far I feel okay about the market, frankly. Now I want to look at industry groups very quickly. Start with XLV. Healthcare looks good, doesn't it? Green bar there, green. So the only flea here is the red sell signal. But with the impulse indicator turning green, I bet that one flips soon. Financials, I had something happen with my data feed, so let's just look at FAS. FAS actually looks pretty good considering that the interest rates haven't moved up much. A buy on the daily, buy on the weekly, and a blue on a sell signal on the weekly, buy on daily and monthly. If I look at consumer discretionary, green, short-term sell sign, monthly looks good. If I look at technology, looks good, doesn't it? Except for the MACD divergence and the sell on the weekly. If I look at industrials, just like technology, a sell on the weekly with a blue, otherwise green and green arrows. Staples. We have a green buy signal, red sell, red sell. We've got blue bar, blue bar. It looks pretty bad, doesn't it? Staples look weak. Materials. Okay, blue bar with a green arrow, red, red, and a green, blue, green arrow, blue line. So yeah, it's positive, but it's not strong. Utilities picked up last week. You could see it here all the way up to the upper envelope. And frankly, it's one of the few things that's got buy signals in all time frames and mostly green. Energy, not looking great, although it did move up, pull back on Friday. The weekly looks bad. Monthly looks fine. And we already looked at financials. So what did I learn from this? I learned that staples don't look so good and that most things are kind of in the middle. All right, so now what happened to that stuff? All right. What else do I want to do? Let's go into HGSI. All right, we're going into HGSI here. I certainly hope this recording comes out because I'm not doing it a third time. And first thing I like doing HGSI is like to go into Major Markets Plus and take a look at key indices. So go into User Group, down to Woodward and Brown, open it up, go up to Major Market Plus, and let's go to T ranker, which ranks things on price and volume yesterday, price and volume 5 days, and just a little bit at 3 weeks. And we could see the strength of the small stocks, gold, utilities, transports, NASDAQ, biotech, weakness in the Dow, weakness in the S&P, right here, 1,500 over there, big stocks, the NASDAQ 100. So let's take a look. I don't believe, let's see, there were any kahunas Thursday. Not that one. I want to hit this one. Yeah, no kahunas on Friday, so we don't have to worry about that. So let's take a look at the S&P 500, and let's go to a clean chart view. Now, one thing that came out to the audience this week is how much I rely upon the weekly bongo as a buy-sell signal, and how I don't like to take trades when it's in a sell signal. And frankly, it's a nice timing signal for the markets. And it's something, I guess you'll have to come to one of my meetings to figure out what I just said. But if one looks at the S&P, huge run-up, it's gone sideways for some time. Now, most important, the S&P has broken out. Here, I'm going to take a bullish impression. Go grab something for my dog. Hold on one second. Come on, Bill. All right, so if I want to take a bullish impression here, bring up my little marker, go back somewhere in the high, should be right about there. And oh, I don't want a box. Sorry about that, wrong marker. I want a line. What I'm showing you here is, try that again. If I set my trend line and I hold down my shift key and I let go of the mouse before the shift key, I have a horizontal line placed. So isn't this bullish if I have a market that has run up, hit a high, pulled back, then broke above the prior high, successfully retested and is moving again? I think that's actually a bullish picture. What about the Dow? Now the Dow has to get back above that new high. Let me extend that. So the Dow is sitting right on that prior high. So we'll see whether it successfully retested it or not. It did knife below, which is bothersome. If I look at, say, the NASDAQ, we'll see a different picture, I bet. The NASDAQ breaking out to a new high, and the Russell 2000, which never got its new high yet, still heading north. I'm using the 50-day moving average as support. Notice on the Russell, the Bongo Weekly is green. On the NASDAQ, the Bongo Weekly is green. On the Russell 2000, the Bongo Weekly is green. I did that already. We want the Dow. It's turned red, and the S&P. So the strength is definitely not the Dow and the S&P stocks. There's the S&P, but rather in the small stocks, the NASDAQ and the Russell. All right, well, that was kind of interesting. How about Sir Dollar? And you could see the dollar has failed again at the 200 and the 50. Dollar has to get above this 200 before I'll give it any respect. And then the VIX had a short rally and came right back down to where it bases from, as you can see here. With a weak dollar, you'd expect gold and silver to have some strength. And gold, that's spider gold, looks like it's gone sideways. And gold miners, let's see if I've got that. Gold miners faring worse than the gold itself, and then silver holding up a little bit better than gold. Perhaps it's above the 200 or about the same as gold. So let's put a summary. And oh, by the way, notice how good this weekly bongo was, a good buy signal here, and that it got you out of the market before it rolled over. So I'm feeling okay about the market. I do think, going back to the beginning, the debate may be meaningful. I am in the camp that we probably have a pretty big correction coming. But I also think that the jury's not out on us getting at least one more rally to take out prior highs. And it wouldn't surprise me for that to end relatively violently and, unfortunately, badly. I'm sorry, I was doing a quick check on my fantasy football game. Shouldn't be doing that now, but I was getting clobbered, and all of a sudden I'm not clobbered anymore. Wow. All right. Next thing I do, I'm leaning bullish, but I am a little bit concerned about the market as I go down to the industry group analysis and look at forced 2-day up. And I see I've got 48 groups up. I had 85 groups up on Thursday. So we lost a lot. On the 5-day, we still have 72. On the 2-day forced down, or the 5-day down, we only got 13. And on the 2-day forced down, we've got 36. So we still have more bullish group than bearish. I'm using the Alexander Force Index, taking the number and ranking the industry groups. Volume and price go into it. Volume's a big part of it, but price determines direction. And you can see energy is hammered on the downside. Exploration, production, oil, gas services, integrated oils. 3 of the first 5 negative groups are energy related. If I go further, and I'm not going to count electrical power, I got refiners at 15. The one I don't see here that's also was weak was some of the MLPs, but they might be different because of the interest rate play. Then I right-click and I'll look at the top 5 groups in the bears to start. Devon Energy. Let's go to my regular web views just for brief discussion. Weekly bongo on top, daily bongo, accumulation distribution, 13-day force, 2-day force. This green line is the high jump. I don't like to go long when I'm at the top. These are red candle highs and green candle lows. Then we have a bar that's Bible gap ups, then the squeeze, then the mobile breakups and breakdowns. We had a breakdown there, and we had a kahuna to the downside and a pocket pivot. Now, why am I bearish on Devon? Run up, it broke through its 50, had a PSA reversal. It looks like it might want to come down to the low 30s. So Devon is a potential short. Anadarko Petroleum. Now, the thing that bothers me about taking a short here is it's still in a weekly buy on the bongo. Anadarko still in a weekly buy in itself, hasn't broke down below its 50, looks a little bit stronger. All right, that was exploration and production. Precious metal mining, gold being weak, Newmont Mining being a leader, and Newmont Gold Mine has broken below the 50, failed on a retest. Weekly bond goes red. I don't think you want to be owning gold until there's a change in the market. Well, you can see gold has failed at the 50. We call that an ice hole failure. AEM has a red candle high, failing at the 50 with the bongo weekly going red. Doesn't look very healthy. American Barracks, been red bongo for a while, failed at the 50, also looks weak. So gold looks weak. Third thing down is semiconductors. They don't look that weak, mostly going sideways, although OLED looks weak. Here is Skyworks, looks like it's rolling over, but early in the pattern, still green on the weekly bongo. Here is Qualcomm, just going sideways with some kahunas to the downside. Intel Corporation, more of a leader than a laggard. I guess the last couple of days have been all over the place. And Universal Display, this is the one that got hammered. Now, why is this not a buy setup? Because it's got a bunch of kahunas. I don't like the weekly bongo red. I'd like to see some momentum to the upside, and I might wait till it takes out the 50 before I would buy it. Oil and gas services, Transocean rig. For those that don't believe that stocks go up and go down, just review the past. You may learn something. I remember this very well, 07, 08, peaking over 160 and then coming back down to the single digits. Talk about exuberance. It's a real company now. It has real services. We don't have the exuberance. It's got a weekly bond go down, clearly in a downtrend. Big down bar here. Make small dollars with decreasing growth. Rig looks weak. I had a Schlumberger position. I sold it when my weekly bongo went red. So that was around 78, 79. I'm glad I did, as it's pulling down to 75. Now, again, a contrarian would say, Jeffrey, you're in a great buy point. What are you complaining about? And I would look at it and say, yeah, I'm at a good buy point. What am I complaining about? And my point being that if this thing goes sideways here for a while, and then it does something like this and breaks above it with pocket pivots and kahunas, but OBV's heading down, everything's red. I wouldn't touch Schlumberger. I'm glad I'm out. Its little brother Halliburton kind of looks a little bit better. That just means it hasn't dropped as much as Schlumberger yet. In the fifth and final group on the downside, it's integrated oils, and again, highly integrated to the price of oil. Not dead yet. For example, if we get a big oil move today and Petrobras moves up off this area with some momentum, it may become a buy. Right now, its weekly bongo green is intact from this long uptrend, and it's sideways, and that's all I can say right now. Chevron, weekly bongos are red. It's below the 50. I don't want to be owning this despite a 4.3% dividend. So all I can say from the dark side is energy certainly looks weak. Let's look at the groups that are moving to the upside. REITs look good. All right, I'm going to go see what my dog wants. I'll be back in 1 second. I'm back. Sorry about that. So from the upside, let's look at REITs. Right-click on the mouse, left-click on the mouse, and we can rank the REITs. Weyerhaeuser, not great earnings per share growth, pays a 3.9% dividend. Kind of loose and going sideways. I passed. Although new weekly bongo turned green, a new pocket pivot and a kahuna, but two sideways. American Tower, run up sideways. It's close. When it breaks above the 50, I bet the weekly bongo will turn green. Give me a kahuna at that time, but not yet. Crown Castle International, well, that's getting there, but it's still weekly bongo green, not yet. Ventas, not yet. So I don't see anything that's ready yet. They all got the weekly bongo until I get here. HCP pays a 5.9% dividend. It's a healthcare professional building, hospital type REIT. Has broken above the 50. Lots of green there. Looks pretty sharp to me. This is one I might consider, and I think it's on my watch list. Second one on the upside is steel producers. These things had a turnaround this week on Friday. U.S. Steel, and again, look at my green bongo indicator. It got me in low. It got me out not as high as I'd like to have gotten out, but that's why you have stop management. Bottom line is it would have got you in around 8 and out 8, probably around 6, out at over 20. Big, deep pullback, bounced off the range of the 200, moving back up. I think steel goes higher. Look at the earnings per share growth coming in. Nucor, exactly the same picture, 3% dividend. ArcelorMittal, kind of flatter, didn't get the same pullback to the same extent, but never got the big bump. All right, I don't go beyond the index. Base metals, so my pick of the year by far, Tech Resources continues a great run. So let's just, I did this earlier, and from my recommendation in February to now, it's up 280% over 154 days. It keeps going higher. Thursday looked bad, and Friday it bounced right back up. And just to point one thing out, that daily bongo went positive when the weekly bongo when the stock was about $4. So from there, the return is even greater. And look at the earnings per share growth coming in. I do have a big position here, and will be watched very tightly. Alcoa doesn't look so great. Pull back, hasn't done much. Looks kind of like the steel producers. Consumer Electronics Index. GoPro had some new stuff come out, and actually people liked them. And you could see a bunch of kahunas and moved up. Now the funny thing is, what did Mr. Bongo know? Because the Bongo went positive a while ago. And, you know, it's not a big move, but On that day, the close was at 11:32, and today the close was at 17:15. So that's a $5 and 85.90. So 5.90 on a base of 11. So that's a 100% gain, or a 50% gain rather, since March. So GoPro's had a nice move off the bottom. Fitbit also stirring above the 50. Had some pocket pivots. Everything is green above. Don't know Control 4 Corporation, kind of a cup, handle, breakout, kahuna, mobile breakout from a squeeze. Everything looks good. Don't like the earnings per share growth. Do like the pattern. I think the handle formed too high up, but that looks like one that wants to go higher. DTS is a buyout. And then I did like, oh, I guess it's not here. Okay. And then infrastructure software. Imperva looks like we missed a great day, and we kind of did. Bible gap up, and this is on news of potential acquisition. So if you were to figure somebody's going to buy it, they're going to probably buy it in this range, probably, in my guess. Sort of in the highest area of this year, probably in the $55, $60 range. Stocks at 44. That might be worth a play, but I don't play arbitrage. It could get bought for all we know at $44, in which case you'd not make any money. Red Hat, nice Bible gap up, pull back some. If it goes any lower, I'm out of this. But the bongo's green, the earnings look good. Lots of pocket pivots. Let's see if it can maintain. If it maintains that and moves higher, that might be something to think about. FireEye, no. MindBody, love this chart. Pulled up, pulled back, sideways, broke out on Friday. Everything's green with a kahuna. I think that looks great. CyberArk is struggling. So we found some stocks that look pretty good. One of the things that I like to do is called the group inclusion filter. And the group inclusion filter allows me to, I'm going to show you what I would do. I already ran a group inclusion filter, click clear, load selection. I'm going to pick, play attention where I find it. C, users, Jeffrey, app data, roaming, HGSI, user, and I pick which one fits. I want the top 50. Then I hit OK, and it builds me a list. Well, I already did that list, and let's take a look at that list right now. So this was the list of the top 30 stocks. Let's take a look at them, then a couple of my buys, and then I'll go back to the charts of the week, and I'll say goodnight. Twitter, Bible gap up on Friday. More merger and acquisition news. It still is a 14-word or 14-letter message. Obviously, that will change, or 14-word message. So big gap up there. One day when these breakouts is going to work. The last several have failed. Amazon, great moving stock. 1% on this stock is $7, so you don't get a whole lot of multi-percent moves. But I would put this in the slow and steady category. Continues in an uptrend. This is a takeover. Adobe up on earnings with a Bible gap up. I think it's got more room to go. Going sideways, I might look for a flag to form and take it when it breaks off from the flag. Planet Fitness, this is a pretty classic Jeffrey pullback to the 50 with a kahuna play. I'd like to see the weekly bongo go green, but we had a nice up move, correction, now broke above the 50, PSAR reversal on a pocket pivot and a kahuna. Good earnings per share growth. I'd probably consider Planet Fitness. Etsy, I think, is like an eBay/Amazon ex-US, maybe in the US. I don't know that much about it. I remember reading something a long time ago. Marketplace sell goods. Berlin, Dublin, New York, London, United Kingdom, and everywhere else. Headquartered in Brooklyn, so it is an American company. Nice run up, pull back to support, breakout with a pocket pivot and a kahuna. That's also interesting to me. Exelixis, this is a blood drug company with some great data. I think, like Clovis, it's potentially a takeout candidate, hence the big run up. Also has some good data. NVIDIA, if you buy a notebook, it's probably got its chips in it. Really a leader in video processing. In a long run up, how would you like to have bought that stock when the weekly bongo first went green? That would have been nice from 32.65 close up to 66. So a double since that happened in March. More room to go likely. Good earnings per share growth. Stamps.com, I can't make money on this stock. This stock gaps up big time or down big on earnings, and it spends the rest of the time fading it and coming back. So I'm not a big fan of Stamps as a trading stock, except for after news or earnings. Opco Health, sideways moving. Biotech trying to break out here. Insight, a quality biotech name with marketed products and a great pipe. Really not been treated well by the market since earlier this year. Going sideways, everything is green. Market cap on this stock is 16 billion. New weekly bongo green. I like the company. I like the management. It's got a good product on the market. Don't like the stock, although maybe it's going to turn around someday. Don't know anything about this biotech, Nevro. Don't like the earnings per share growth, but certainly a nice lower left, upper right pattern. Ariad Pharma, another, kill that candle I made. Another small biotech. They have a drug for leukemia, a new drug for lung cancer, getting a lot of play. I don't like buying at a high jump bar, red candle high, shooting star, because in my mind, odds are you get one of these forming tomorrow. And I don't want to be buying it at high close doji or low close doji. Now, if I'm wrong and we break above the high of that doji, I might really consider coming back in. But this one's had a big run. It's certainly extended. United Therapeutics, one of my favorite looking drug company charts. Yes, it's in a downtrend. Yes, the 200-day moving average is trending down, although it's turned sideways. Everything is green. You have a pocket pivot and a kahuna, and you have great earnings per share growth coming in. Not a cha-cha-cha stock, but perhaps an undervalued stock in this patch with a nice cystic fibrosis rare disease portfolio. DTS as a takeover. Fox Factory had some news earlier in the week. Let's see if we can figure out what that news was. All right, sorry about that. Secondary offering. New dividend. Must have been a good earnings beat. All right, so big volume on this. Nice stepwise move up, getting extended. Bible gap up, squeeze, mobile breakouts, pocket pivots, and kahunas. Only trades 344,000 shares a day. Might be interesting to look at. Probably not my cup of tea. Arista Networks, a nice move up here. Getting extended. Technology play. Berry Plastics, specialty chemistry, now container and packaging company. Big move up since the bongo. We had a bongo green here. We held until here. So not much of a gain. Pretty much a little bit of a gain. Here's where the big came in when you went the bongo green there, and it's had a very nice move up. Pullback, I like to see some momentum. That looks interesting. Acalero, a great little semiconductor stock, running up a flagpole. Hard to buy that on the way up. Look for pullbacks. Central Garden Pet, it really looks compelling. Uptrend, pullback to support on the 50. Pocket pivot and kahuna just hasn't turned yet green on the weekly bongo. This one looks very interesting as well. Carbonite, technology software play, just a big up move, getting extended. Eldorado Resorts, another uptrend pullback, mostly lateral to the 50. Several kahunas came in. They had a pretty big acquisition this week. I guess the votes look okay about it. I think this is one to follow and maybe consider. ANIP Pharma, ANIP is the ticker. Love this pattern. Found this one to be compelling as well. On my buy list, Barracuda Networks, a little bit less excited. Supernus Pharma already broke out. Found this one a week or two ago. Multiple kahunas on the 50, and it broke out. Independence Realty Trust, another strong moving stock with a big move already. Hard to jump on this. Corcept Therapeutics, biotech specialty pharma, sideways at a breakout here. Don't know enough about it to tell you anything. Really like this stock a lot. PCMI, Bible gap up, sideways, running again. Everything is green, kahunas. Great earnings per share growth. I mean, massive earnings per share growth. Zencor, another biotech stock. Nice move up, stair-step fashion. Wait for the stair-step. And then Gigamon, a great leader by any means, broke out here at the same time as the weekly bongo turned green, and since that time has had a 60% run. Still looks strong. Get a little bit of basing here before it runs again. Since I'm a big fan of Gil Morales, all I need is an L and you got the Gilmo stock. Something people have heard before from Gil. All right, on my buy stocks, just to show you my list and to talk about a couple of them. This was my buy list that I put together. Now, you've seen most of these stocks already today. If I look at them from the perspective, let me go to a scorecard. All right, and I look at what we have. I have a lot of REITs, a lot of healthcare here. I've got biotech, I got specialty pharma, then I got some steel, midstream oil and gas are the only longs here on the energy side. Couple of my favorites. Let me bring in seasonality as well to show you how I might use it. Delta Airlines, I've been in and out of that stock. I like to sell it. I once told somebody that I sell it at 50 and buy it back under 40. Well, it's under 40 and I bought it back. This is a good time of year to own Delta. If one looks at seasonality on Delta and set that to earnings, set the earnings date to October 14th, you could see that we're going through a period of time where green is good and Delta goes up. If you look at September 23rd, November 3rd, 9 years it's been around. 8 out of 9 years it's been up. Average up is 14%. My dog is being incorrigible. So I think Delta looks good. Also on my buy list that I liked a lot, we already saw tech. Many of these we've already seen before. JD.com looks like it wants to run. Bit Auto and VIPs also were breaking out this week. PSAR reversal, mobile breakout from a squeeze, everything is green, pocket pivot and kahuna. Like that pattern a lot. I do have a position in it. We saw Mind Body. And I think I showed you the ones that I thought were some of the best, except for the two I haven't shown you yet. So let's take a look at them. Let's go back to my PowerPoint presentation and see what we got when we get to chart of the week. So I'm a little bit, won't say confused this week, but I'm not convicted, meaning I'm not convinced one way or the other which way the market's going to go. So I've got a bull and a bear pick for you. They're presented for education purposes only. If I talk options, which I probably won't tonight, one has to remember that trading options carry substantial risk of loss. I don't warrant any expectation return. I may or may not already have a position. I plan on taking the trades to the execute so I can discuss on the following session. I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I choose a specific stock or option strategy, and where I would plan on taking profits. So, bull versus bear, as I said, we got one of each because I think the debate doesn't happen until Monday night, so I need to be prepared to go either way. My bullish setup of the week, my chart is SAH, Sonic Automotive. I saw a lot of movement in car parts this week. What did I like about this auto retail parts company? I like the fact that I have a weekly bongo green And you should probably figure out that's a very important signal to me. I have a mobile breakout from a squeeze on Friday. I am breaking above the 200-day moving average. The group strength is trending up. My stock is trending up. My OBV is trending up, and I had a kahuna. I also like Delta NSA as well as SAH. There are a few more I liked as well. When I looked at my John Person indicators, on the weekly I saw a high close doji and a new PPS buy. I saw the histogram is trending up. I saw volume crossed over the moving average. I see that I'm coming out of a squeeze, which is one of my indicators. As we know, the weekly bongo has turned green, which is important. And on the daily, we're in a PPS buy with great volume. So I like this stock a lot. My trade parameters, I'm going to put a buy stop at 18.35, my sell stop at 17.05, risking $1.30 per share. That puts my 1-to-1 in green to 19.65. My risk is 7%, and I can buy 1,500 shares for every 2,000 of risk capital. Here is my target. Here is my takeout price, and there's my stop. I gave this a lot of room, but almost all of these recent bars can be captured with this stop. I don't want to get stopped out if there's some intra-market volatility. What about to the bear side? Well, I don't pull this trade until I get more things happening. But if you're bearish on oil, you might want to be bearish on RSPP. Why did I pick this? Well, look at this chart. This chart shows me that I had a weekly bongo to the downside. My kahunas are to the downside. I had a mobile breakdown. I broke through the 50-day moving average. My group index is turning down. My OBV broke under the moving average. I got kahunas to the downside, and I have pocket pivots to the downside there and kahunas to the downside. So a lot to not love. Probably a day late or a couple days late. But you could see last week it had a low close doji and a new PPS sell signal. Histogram failed to make a new high when the stock did. That's bearish. OBV is rolling over. I've now developed a sell signal on the bongos. The volume indicator is dropping. This is a very weak-looking stock on the daily. I've got a new PPS sell signal. Again, the volume is weak. So I have a lot of expectations that this thing's going to dump. Now, if I want to go back here, I would prefer to see the stock rally back up and fail at the 50-day moving average in blue and short it up there. So I'm going to look for that. But RSPP is my short pick of the week. The HGSI PUG user groups remain strong. You need to be a member or an owner of John's Lifetime Indicators. And a lot of the folks inside use HGSI. It is not a pure HGSI user group. I formed it so I could bridge the HGSI user with John's stuff in TradeStation. It's also turned out an opportunity to introduce a new audience to HGSI. Hope to see you in Florida at my next meeting. Y'all have a great week, and thank you, and let's hope this one came out because I'm not doing it a third time.